As you build up for retirement, RRSPs are an integral part of savings for retirement. But how do you get more contribution room? What is carry forward room? How do you know how much you can put into your RRSP? It's your notice of assessment. So in this video, we're going to break it all down. And I want to thank Harvest ETFs for sponsoring this video. So every year, if you have RRSP contribution limit that you don't use, it will be carried forward to the following year. So let's say I have $10,000 RRSP contribution room for 2023 while I'm filming this, and I don't use any of it this year. Next year, I can use that $10,000 plus any new room. So how do we earn new RRSP contribution room? It's based on 18% of your income. Now it's 18% of line 150 on your tax return, which is your total income. So let's say you make $50,000, then you'll earn another $9,000 of RRSP contribution room. So for myself, if I had $10,000 that I didn't use, I made $50,000, I would get an additional 9, meaning that in 2024, I could make RRSP contribution up to $19,000 because that's my carry forward room plus new contribution room. I want to run through a quick sample that we pulled off offline, and it just shows the notice of assessment. So this is from 2019, it's a few years old, but the concept's the same. So in this example, the client's 2019 notice of assessment reflects that they had RRSP deduction limit of $19,319. They contributed and deducted $10,000, you'll see on that third line down, and generated additional RRSP deduction room of $13,092. So based off this, if you said, okay, they earned $13,092, that means if I divide that by 18%, we're gonna have $72,733 of income. So that was their income. They earn 18% of it. Thus, they have an additional $13,092 of contribution room. So when we take their carryover room of $19,000 and change, add in the $13,000 of new room, minus off their $10,000 that they actually put in and deducted, then they're left with $22,411 for the next year. In this case, 2020 could be the same example, carry forward to 2024. So that's how it works. You're gonna have some carryover room, you minus any contributions you made, add on any new contribution room, and you're left with what you're able to use the following year. Now, every year there's a maximum RRSP contribution limit that you can actually earn. So if you make $1 million, you don't get $180,000 of RRSP contribution room. Be a great thing. I mean, that'd be a great income, be a great way to deduct some of that, but every year there's a maximum that you can earn. And so for 2023, the maximum is $30,780, which means that you divide that by 18%, you see that you can have a high income, $171,000 of income. So you can have a fairly high income and earn a lot of RRSP room. Now again, when you make a contribution to an RRSP, you don't have to deduct it all that year. So if I had that $10,000 contribution limit for 2023, and I put $10,000 in, I don't necessarily have to claim that right away. Now, there's many reasons why I wouldn't. Maybe I'm expecting a much higher income next year and I want to carry that forward, but I want to get the money in the market now. There's different reasons you could do that. RRSP homebuyer plan. You have to have it in there for 90 days. So we've had some clients that will put it in a bit earlier than they need to deduct it. There's some strategy there. So again, talk to your financial planner. But in general, when you make an RRSP contribution, you're going to claim it in the year that you make it, and it will deduct off of your carry forward room from the previous year. Now, one thing to know, let's say I had the $10,000 for 2023. I have all the way to the RRSP contribution date to make that contribution for 2023. Now, the date is 60 days past year end. So in 2024, it's a leap year, meaning that the deadline is going to be February 29th. So as long as I make an RRSP contribution prior to or on February 29th, I can claim that for 2023 taxes. And that's really important. Typically, March 1st is the deadline. Again, 2024, because of the leap year, it's going to be February 29th. But I don't have to make my RRSP contribution deposit before the end, like before December 31st. I can hold off, wait to see like how my total income levels out before the end of the year. Then in January or February, I can make that RRSP contribution. And when I do my taxes, I can claim that either for 2023 or use it for 2024 going forward. But it does give you room to kind of backdate it. And that's why there's a big push, typically money coming in the market in Canada anyway, through February, because a lot of people are making their final push for RSP contribution room. Now, one tip for a lot of you, because I've heard this horror story many times, is a lot of you will go to your financial planner, financial institution to make that RSP contribution on the 11th hour on the last day of the deadline. And I encourage you, you may be told no. We had, even though the deadline's midnight, maybe an institution cuts it off at 3 because they don't have staff, they're not open, whatever it is. So don't wait till the last day. Don't do it February 29th. That is the deadline. Try and do it a few days before February 29th and you'll save yourself a big headache. I want to thank Harvest ETFs for sponsoring this video. Harvest focuses on wealth creation by investing in strong, growth-oriented businesses and using cover calls for income generation. Harvest ETFs believes that wealth is created and preserved by owning leading businesses and high-quality fixed income securities. That's why Harvest ETFs are invested in leading businesses with a focus on long-term growth industries or secular major trends. They take a similar approach with their fixed income ETFs, which provide indirect exposure to quality US Treasuries with long duration and high credit ratings. I encourage all of you to check out Harvest ETF's website. They have a lot of really cool funds, really good information, education stuff. I want to highlight 2 of their funds that really caught my eye when I went to their website to check them out. The first one is the Harvest Clean Energy ETF. And the Harvest Clean Energy ETF is designed to capture the global transition to clean energy, which for all of us, I think that's really important. I think a lot of us are trying to do clean energy. I know I drive a Tesla. I drive it because it's fun, but also because it's clean. It doesn't burn fuel and gas and all of that. This ETF invests in a portfolio of the 40 largest clean energy issuers selected from the clean energy investable universe to provide unit holders, you as the investor, with the opportunity to capital appreciation. So if you're someone looking for a clean energy investment with the cover calls built into it, this might be a great solution for you. So I want you to go to Harvest ETF's website. We'll put the link below and check out this fund to see if it's a good solution for you to put inside your portfolio as you move forward. The second fund I want to highlight, and this one's hitting home for everyone right now, is Travel and Leisure. So they have the Harvest Travel and Leisure Index ETF. The Harvest Travel and Leisure Index ETF provides investors access to a diversified portfolio of large capitalization companies that own or operate travel-related businesses. Harvest believes that prior to the pandemic, global travel growth had structural long-term drivers, and in the short term, these companies stand to benefit from a resumption in travel following global shutdowns. And I know for all of you that are starting to kind of travel again, you've seen, things are more expensive, but it's also busy. I've been in a few airports lately and it's been very, very busy. So an investment like this might be a good opportunity to capitalize on that. Again, talk to your financial advisor, check out Harvest ETFs, and Harvest ETFs, thank you for sponsoring this video. We appreciate it. The last comment I have on all of this is if you don't get your notice of assessment or you're not sure, make sure you have access to CRA Online. CRA Online, you can grab your TFSA limit, your RSP, get the full breakdown, past tax returns, all of that. So if you're someone that hasn't logged into CRA Online, make sure you get that. It's going to be very beneficial, especially as you head closer to retirement. You're going to want your CRA access, which gets you access to your tax returns, RSP, and TFSA contribution limits. You're also going to want access to Service Canada. And that's going to be giving you access to your old age security, your CPP, any other government benefits like that. So you want to make sure you have access to that. So you should have 2 portals to access kind of these financial information through the government. And if you don't have that, make sure to get both set up. But CRA Online Access will give you your RSP. It'll break down once you've filed your tax return and it's been processed, it'll give you your new contribution room. So again, as we head into 2024, it's really important to know what was your RSP contribution limit, how much did you put in, and how much carryover did you have. Then you take your income, times it by 18%, again, maximum of $30,780. For most of you, you're not gonna hit that, so just add that 18% of your income in, and that gives you how much money you can put into your RSP. Now, one tip for you before we jump off the video is, if you're heading into your last year, maybe your second last year of work, and you have a higher income, and in retirement it's gonna drop down, or you're gonna split income with your spouse or common law partner, your taxable income is gonna be much lower. You wanna make sure you're utilizing your RSP contribution room in the last year, 2, 3, however many years you have left. Make sure you don't hit retirement with a large amount of RSP contribution room because it's kind of wasted space. That's a great tax strategy to make sure you utilize that as you enter into retirement.